President Trump's recent tariff announcements have sent shockwaves through the global economy. He initially declared a new era of reciprocal tariffs, aiming to protect American businesses and workers. This approach involved raising tariffs on goods from most countries to 10%. However, just days later he announced a 90-day pause on these tariffs for many nations. This unexpected move aimed to provide a window for negotiation and ease immediate market anxieties. China emerged as a notable exception to this pause. Tariffs on Chinese goods saw a significant increase, rising from 104% to a staggering 125%. This decision reflects the ongoing trade tensions between the two economic giants. The Trump administration argues that these tariffs are necessary to address unfair trade practices and protect American interests. The 90-day pause brought a sigh of relief to many nations. The European Union, for instance, responded by pausing its own retaliatory tariffs. The UK, currently in advanced trade talks with the US, faces a more complex situation. While the tariff pause presents an opportunity, challenges remain in securing a mutually beneficial trade deal. Other countries, including Vietnam, South Korea, and New Zealand, have seized this period to bolster trade talks with the US. They see this as a chance to strengthen economic ties and potentially benefit from trade diverted away from China. The coming months will be crucial in determining the long-term impact of these tariff decisions. The immediate aftermath of Trump's announcements saw a mixed bag of reactions. Mexico and Canada, largely bound by the terms of the USMCA trade agreement, faced tariffs of around 25% on goods not compliant with the deal. This highlights the complexities of navigating trade relations in a world of shifting alliances and priorities. American consumers, however, are already feeling the pinch. The tariffs have led to price increases on a range of goods from bicycles to electronics. Stephen Ma, a bike shop owner, laments, "The tariffs are hurting my business. Customers are hesitant to buy bikes with the increased prices." While some argue that tariffs will ultimately benefit American businesses and create jobs, others fear the long-term consequences. Ryan Raker, who runs a tech marketing business, worries, "The tariffs are creating uncertainty and disrupting supply chains. It's making it harder for businesses like mine to plan for the future." The impact on China has been significant. In retaliation to the US tariffs, China imposed its own 84% tariffs on American goods. This tit-for-tat approach threatens to escalate the trade war and harm both economies. Moreover, China has taken aim at American cultural exports, reducing the number of American films screened in its cinemas. The initial market reaction to Trump's tariff announcement was one of sheer panic. The Dow Jones Industrial Average plummeted, reflecting investor fears of a full-blown trade war. However, the subsequent 90-day pause triggered a massive market rebound. The Dow surged by nearly 3,000 points, marking its best day since 2008. This rollercoaster ride underscores the sensitivity of global markets to trade policy uncertainty. James Early, CEO of a financial research firm, notes, "The market volatility reflects the high stakes involved. Investors are trying to make sense of the rapidly changing trade landscape." Unfortunately, the initial euphoria proved short-lived. In the days following the pause announcement, markets gave back some of their gains. Technology stocks, heavily reliant on global supply chains, were particularly hard hit. This volatility highlights the fragility of the global economy and the potential for trade disputes to derail growth. The impact extended beyond US borders. Asian markets, including Japan's Nikkei 225, also experienced significant declines. This ripple effect demonstrates the interconnectedness of the global economy and the far-reaching consequences of trade tensions. The 90-day pause provides a temporary reprieve, but the underlying trade tensions remain unresolved. Economists warn of a heightened risk of a global recession. Goldman Sachs, for instance, predicts a 45% chance of a recession within the next 12 months. Adding fuel to the fire are allegations of insider trading. Reports suggest that some individuals may have profited from advanced knowledge of the tariff pause. These allegations, if proven true, would further erode trust in the government and the markets. The trade war's impact extends beyond economics. It has strained relations between the US and its allies, creating a climate of uncertainty and mistrust. The situation has also emboldened China, which is increasingly assertive on the global stage. The coming months will be critical. The 90-day pause provides a narrow window of opportunity for negotiation and compromise. Failure to reach a resolution could have profound and lasting consequences for the global economy and the future of trade. The world is watching, anxiously awaiting the outcome of this high-stakes game of economic chess. Don't forget to subscribe, like, and comment.